Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about are interest rates likely to drop in 2023? Well, there's some updates on that in the last week, so we're going to cover those very shortly. But while you're here, can you do me a quick favor? Firstly, smash subscribe on the channel and hit the bell notification, then smash the like button. And then thirdly, we're launching the Property Accelerator online on Friday, May the 26th. And I want to ask you to join the VIP waiting list. This is going to give you an opportunity to network with property investors, get some of the best training in the UK, and it starts at just £1. Like, it's absolutely bonkers. And so how you can join the VIP list to get notified about that when we launch next Friday is in the description. Is going to be a link. Fill in your details and then you will be in the VIP waiting list and get all the details once we launch. Now, interest rates. This is something that's holding back a number of investors at the moment. I mean, I'm speaking with investors and they're saying, look, I want to get some deals, but I'm going to wait for the prices, not the prices necessarily, the interest rates to come down. Now, there's some updates actually from the Fed, and the UK Bank of England generally follows the Fed. That's normally what we end up doing. And the Fed, some of the members are now coming out and saying that there will be no interest rate drops in 2023. Inflation has been that little bit stickier than what people are expecting, and there's nothing likely to happen this year. Now, that could change. It really depends on things in America, particularly if they have more bank failures, because they've already had a few of those. And if they get more bank failures, then they're likely to drop interest rates to help those struggling banks over there for sure. And so that's an indication on what we will expect from the Bank of England going forward. Now, there was talk literally only a few weeks ago that the Bank of England would start dropping rates in 2023. Then we had the difficult scenario where inflation suddenly went up again in the UK, and that was a real disaster. Now, the bank was also talking about not rising rates anymore, and that inflation rise actually caused us to have the new Bank of England base rate of 4.5% that was introduced at the middle of last week. And so I think that we're not likely to see any interest rate decreases in 2023. So as an investor, should we be worried about that? Well, not really, because the base rate is at 4.5%. But if you have a look around, there are deals at 3.89%, 3.84%. Go on Money Supermarket. Yes, fees are higher, and I think fees are going to stay higher for that little bit longer. But look, those rates work. If you just wanted to do a boring vanilla buy-to-let, right? You wanted to buy a 100 grand house, you put in 25 grand yourself, and then you get a rate of, so you're borrowing 75 grand, you get a rate of 3.84. The mortgage payments on that, they're only £240 a month. Now, you could easily rent a property, a 100 grand house, for example, in Doncaster or Hull or anywhere around that area. You could buy a property for 100 grand and easily rent that out for £575. It would be very straightforward to do that. Then you've got £300 gross profit. Out of that, you can pay your agency fees, your insurance. You're not going to make millions from that, but it would be a nice little earner from what you invest. You'd get around 10% back on the cash that you invested. So not bad, considering if you leave it in the bank, it's depreciating while we've got high inflation. So if you could put 25 grand into a vanilla buy-to-let, that deal would stack up. Now, there is volatility in the market. Prices could come down in the next year, but I don't think they're going to come down so much up north because the affordability is there. There are some places, I did a video on this recently, so go and check that out. There are some places up north where to buy a house, you only need 2.4 times your earnings. Up north in Yorkshire, on a whole, you need roughly 4 times your salary in order to be able to buy a property. Now, down south, where I feel if we do have a price correction, you're going to get hit much harder, like in the southeast and London, there are places in Chelsea, for example, where you need 70 times your salary in order to be able to buy a property in Chelsea, because international investors are buying up all the stock in those areas, for example. However, in the rest of the Southeast, people need 9 times their salary in order to be able to purchase a property. It's a big, big ask. And so affordability is fine in the north. It's the south that the things are really, really, really difficult. And so should you be looking at deals now? Yes. There are always good deals in the market, regardless of whether rates are high or prices are going up or down. There are always going to be some motivated sellers. There are always going to be properties where you can add value and pull money back out so you don't have money left in. That's another great opportunity for you as well. There's tons of great stuff going on, regardless what happens in the market. And so, yes, it's now looking like rates are not going to go down in 2023. I think that's probably right. And that doesn't mean that we stop doing what we do. We just crack on. We make sure we use high cash flow strategies are going to be better, like service accommodation, HMOs. Look at those types of investments rather than a normal buy-to-let. But if you want a simple buy-to-let, hands-off experience, look up north. See what deals you can find, because there are some great deals there still. But let me know what your opinion is. Do you think the rates are going up, down, sideways, pausing? What do you think is going to happen? Comment below. Do like the video, subscribe to the channel, and get yourself on that priority list. And we'll see you in the Property Accelerator next Friday.